Hey harvesters, and welcome back to the channel. My name is Matt, and in today's video we're going to go over a couple of topics. I haven't made a video in the last 2 weeks, so we're going to highlight how the week over week progress has been for the last 2 weeks. I'm not really going to go through individual trades. I'm just going to highlight the last two trading days of October 30th and October 31st. I will say during that last 2 week period, my trading wasn't terribly exciting. I think if there was one way to characterize what I was doing, it was definitely patience. I thought the market was a little bit too overpriced. Therefore, I was sitting on a lot of cash and running cash secured puts, and I really wasn't owning any shares. Usually, I own about 400 shares of QQQ. I pretty much kept just running cash secured puts, and they kept expiring worthless. So I was sitting on a lot of cash secured puts, and then I would say Robinhood did pay me a decent amount of cash based off of the interest because I was holding my money in cash. All right, so we're going to talk about that stuff. Then we wrapped up October. We're going to talk about October's numbers. We're going to talk about the major milestone I hit for 2025. And lastly, I'm going to talk about the trading that I plan on doing for tomorrow, November 3rd. So let's get the ball rolling. You guys know me. The first thing I like to talk about on my channel is my account overview. And currently it's at $213,744. As you guys can see, the last week I've been up about $1,500, but then I kind of calculate my own numbers whenever I go to the spreadsheet. So we'll just kind of talk about those from what we're seeing. But yep, this is what I'm dealing with. As you guys can see, I do have a speculative play coming and going on for Fisser. They dropped like 40%, almost 50% in a single day. So I was thinking this is just a very speculative play. Maybe about 1% of my portfolio decided, hey, it dropped so hard, so fast that it's got to rebound a little bit. So I ran a leap on it. So this expires December of 2026. So pretty much a year and a couple of months from now. So if it goes up, 5 or 10% of that option going to close out, going to cash out. But that was a speculative play for me. So besides that, guys, I don't really have anything else that I'm holding to. I don't have anything else that's a like major holding. I do have some VU shares, but as you guys have been hearing from my recent channels, I'm not investing into my 401k anymore. Therefore, I still want to invest into a long-term holding, and that's why I'm investing in VU. So all of the money that I would have been placing into a 401k that I can't touch until 59 and a half years old, I'm now just going to put into VU so that I can have more buying power to then run options inside of my account. So therefore, that's kind of the strategy behind that. So this month, or at least October 31st, I got paid for my November paycheck. So I took about $2,000 and also placed it into my account for November. Cool. So now that we have all of that foundation laid out, let's head over to the spreadsheet and let's start talking about the numbers. All right, guys, the 2025 milestone I wanted to throw out there is we've hit $60,000 in appreciation and or premium gain. That is a huge milestone that I did not think I was even going to achieve this year because I was investing into high income ETFs and the way that they were performing. I loved the amount of premium they were generating, and every single week and every single month, you had that dopamine hit of, hey, you had all this money coming into your account. But once you realize how much actual return you are making and then your total return, it really wasn't that much better. And then what really did it for me is during the tariff time and the market took a massive dump, the high income ETFs realms were losing 2 to 3 times the amount of value that the normal, SPY or QQQ ETFs were. So once I noticed that, I'm like, I'm done with this. I'm going to try running my own options from that point on. And so that's where this project stemmed from. Since April 11th, I've been running my own covered calls and cash secured puts. I sometimes do run speculatives of like buy calls or buy puts, but I would say 99 to about 95% of my account is running very safe covered calls and cash secured puts. For you guys that are not familiar with covered calls or cash secured puts, covered calls is you own 100 shares of an asset. For me, I have 2 core foundational values that I follow. Rule number 1, invest into good investments. Don't invest into speculation. Don't invest into anything that isn't a part of the S&P 500 and it actually has revenue. Of course, there's going to be times where like, hey, there's a speculative stock, it's making good premium. The share price isn't that much money. So you can theoretically make more premium based off of the amount of shares and money you're investing in. I have done that before. I've got bit by that. So I just like investing into companies that have actual revenue and are part of maybe even the top S&P 500 top 100. I don't like investing in anything any company that is not vetted by all the different hedge funds and all the different analytic services. Rule number 2 is don't sell below your cost basis. This seems like a very, no brainer, makes total common sense. But then the funny thing is, common sense isn't so common in today's world. So every time I have any type of option assigned, even if the market turns blood red for the next couple of weeks or next couple of months, I will not sell below my cost basis. Some people say like, oh, you can dollar cost average based off of when you bought in at versus your premium. I don't like doing that, because by doing that, you're losing. So the gain that you've already locked in, you're now bringing that gain down, and then you're basically starting over. So for me, once I lock in that money, I don't ever want to lose that gain. So therefore, I will just wait for the market to recover back to the point, so that once the market recovers back to the point of where I bought in at, then I'll restart running premiums that are going to be a lot better for where my cost basis was at. And as you guys can tell from the last, 141 times I've traded, or 141 days I've traded, I've been performing about 42.17%. That is pretty good if you ask me. I haven't been doing anything too sexy to make that type of return. I've made $60,000. So yeah, I'm actually surprised that I'm beating the ETFs. It's not something that I'm advertising, but the QQQ during that same period from April 11th to now was only up 38%. I'm actually up 42.17. So I'm outperforming the QQQ. Kind of cool, but I'm not advertising that. The reason why I started this project in the first place is I want to be able to have a sum of money that I'm going to be able to live off of before that 59 and a half retirement age. So therefore, this is where that project stemmed from. So that's where we're at. $60,000 of premium appreciation gain. We're at 42.17% gain. As you guys can see, I have about $2,000 here on the side in this purple area. That's just the money that I'm putting into VU instead of my 401k. I did misspeak on the previous slide when we were looking at Robinhood. I still invest into my 401k up until my company's match. Anything from the company's match until like maxing out a 401k, I'm just taking that money, not taking the money, but instead of investing in the 401k, I'm just buying VU with it. And the reason why I'm investing in VU is I don't want to buy SPY, and I don't really intend on running covered calls or cash secured puts off of this VU. This is just my long-term holding that I'm going to use as a silo so that I can borrow against it with buying power or cash secured puts. So eventually, like right now, I only have like $4,000 of VU at this moment. But, 3 years from now, when I have about $60,000, probably more, 4 years from now, when I have about between $80,000 to $100,000 of VU, then I'd be able to run like one cash secured put from it. But so there will be some time before I'd be able to actually make use of this money. But however, during that time of that, the VU appreciating, and then I'm compiling more and more money, I'll be able to borrow against it to produce more income. So that's kind of the whole strategy. We're kind of using debt. We're being smart about our investments, and we're only investing into things that are going to be successful long-term. So looking at my trade win percentage, I'm winning 98.59% of my trades. I had 140 winning days, 2 losing days. And just for anyone that's a new viewer to the channel, the 2 losing days were because I was not following my own principles. I sold below my cost basis because the market was blood red. I wanted to generate premium. I was greedy, but then that was also that weird kind of terror of time where somebody spoke and then the market shot up. I blew past my, covered calls that were way below my cost basis. I decided to roll my options and then didn't roll them high enough and then got them assigned at a loss. So that happened to me twice. And then from that point on, I made a rule, no more selling below my cost basis. And then I haven't lost a day since. So looking at some of my statistics for my trading, I'm averaging about $425 a day. If we look at that as a weekly number, it's about $2,000. And as a monthly, that's about $8,000. Yes. And from what I've seen in my trading, I average somewhere between about $1,300 to about $2,000 per week. And since I've only been running my own covered calls and cash secured puts since about April, I wanted to project what a year's worth of return would look like. So based off of my current trading performance in a year period, I'd make about $104,000. And based off of my initial investment, that would be about a 70% return. However, we'll scroll down to the bottom of the spreadsheet and talk about what the return would actually look like. And from what I've seen since about April to now, I'm ranging between 49 and 71% return. Cool. All right, guys. So taking a look at the 2025 year values, um, I was making some modifications to the spreadsheet, so it's not coming up with my estimated income. I'm going to fix that one of these other days, but estimated income is at that $60,000. That's what we've made thus far. But if we look at how much money I've been making per month, it's about $8,000. So theoretically, by the end of 2025, I should have another about $16,000. So we add that, that's about 76 to about $80,000. Because I'm a high income earner, I'm going to get beat to death with taxes. So I will probably be having to pay about $30,000 in taxes. However, I did incur some losses just selling out of my high income ETF. So it might not actually be that bad. I'm definitely going to pay taxes because I am making quite a bit of premium from my own trading. But if you look at the end of the year value between how much money I've made and then how much money I'm going to have to pull out to pay taxes, it's going to range somewhere between $192,000 to about $200,000. And if you look at the net gain from what I have made thus far, I'm up almost $40,000, and that's a net gain of 26%. And this doesn't seem like a lot of money, but we still have 2 more months left. That's going to help bump some of these numbers up. I will say this, it is that time of year where it's tax harvesting. And that's another reason why I was very hesitant and very patient with running some of my options, because since I thought the market was too high and we're heading into that time of the year where it's like the tax loss harvesting, where hedge funds are trying to, sell some stuff at losses because they don't want to pay as much taxes. I don't want to be caught with my pants down and buy some shares at, at a high price, and then I'm stuck with them for a couple of months. I've definitely been but I have been pulling off of the throttle when it comes to some of my options trading. So we will see how the next couple weeks play out. November was a lot higher than I expected. And there's one thing that I've noticed in the stock market is every time there's a high, there's definitely going to be a little bit of regression. So I think the next few weeks there will probably see that regression come into play. But I will say some of the earnings from some of these tech stocks have been pretty good. So I don't know. It's hard to say. But yep, we're at 26. And so the reason why I like running this strategy is, one, I want to retire early. Currently, I just turned 32 about 2 weeks ago. So I want to retire earlier, but retire is kind of like it's a vague term. I would find a different type of hobby or passion to then, take a majority of my time. The second reason is I work in tech, and I am actually scared to death that AI is going to take my job and a lot of other, coders and developers jobs in the next 5 or 10 years. And it's definitely going to be better suited if I prepare myself to produce some sort of income on the side in addition to, working a W-2. But I definitely think with how AI and how much investment is going into AI, a lot of like white collar jobs are going to be obsolete. Any of the blue collar guys, you guys are going to be fine. You're going to be fine. Electricians, plumbers, blue collar types. You're not going to have an issue because, one, not many people want to do those jobs. Two, we are way far away from like robots getting to the point that they're going to take that job. But for people like myself, I need to find a solution. So that's two. So I'm probably going to get laid off 5 or 10 years from now. Not that may or may not happen. Hopefully it doesn't. But I want to plan as if it is, right? I don't trust anybody. I don't trust anything. I don't trust the government. So therefore, I'm going to now position myself to make the best of it. So then if I were to get laid off, I would be able to produce an income. That's where these options come in. I could probably live off of $8,000, no problem right now. And then there's a third reason. And that third reason is, even if maybe there isn't layoffs, maybe AI doesn't actually, is as good as they say it is. This could then be used to then enhance the quality of my life, right? Say you are working a W-2 income, you don't make that much money, but based off of this extra trading income, you then could buy the car that you want, that your family needs. You can afford repairs, you can afford groceries. Maybe you can get a little bit of a bigger house. Maybe you can go on a family vacation because you hit a pretty good week or a pretty good month. Therefore, this can definitely help enhance your lifestyle as well. So those are the 3 reasons why, could potentially retire early, it's a, you know, it's a contingency plan if something goes haywire, if someone's health goes sideways, you lose a job, you need emergency money, you can be able to then make money to then pay for those expenses. And then number three, also enhance the life. So that's kind of the reason why I'm trying to do this, trying to figure this out, and I'm trying to spread this great word to you guys. So yeah, so that is pretty much those numbers. And let's take a look at these percentages. So I've been tracking the day-to-day difference in my portfolio to the SPY, and I started back on, I think, August 1st. And during the last couple of months and weeks, I have been up 22.36%. However, the SPY, okay, my face is in the way. I'm up 22.36% since August. And since August, the SPY was only up 2.81%. So I've actually been outperforming the market quite significantly. I don't know if that's exactly accurate because I'm just adding up all the pluses and minuses and percent changes. So I can definitely get that actual number from August 1st to what it is now. And then heading over to the week over week, let me scroll up. We have been on a pretty good 4-digit club week for quite some time. We've had about 8 weeks in a row that we hit that 4-digit club where we're in the thousands of dollars. So I am pretty stoked about that. Does it when I press a double click, it takes me to a completely different part of the screen. Okay, but for 2 weeks ago, which was my birthday week, made about $1,800. And this last week from October 27th to October 31st, we're at $1,700. So that's definitely the average of what we've been seeing, making somewhere between, $1,800 to $1,700 a day. So I was pretty stoked about that. 8 weeks in a row, making 4 digits. Man, every time I look at September 8th week, man, making $7,000 was quite crazy. Looking at the monthly tracker, for the month of October, I've made $12,362.64. So that is exactly what I like to see. Starting off this project back on April, it was quite small. April was a small, premium appreciation type of month because one, I was running my own options for the first time, and then also I just offloaded my ETF, my high income ETFs, learning the process of options trading, and then I also started mid-month, so I didn't really make that much money. And then as you guys can see, month over month, I'm slowly starting to get the hang of this options trading. And then for September and October, I just had massive amounts of trading. Hopefully November and December are going to be, that 5-digit club, but I'll take a 4 digits any day of the week, any month of the year. But because of the whole tax loss harvesting coming up, I am very skeptical if we're even going to be able to get that. So if I can consistently make that $1,000 a week, I would be happy with that. And lastly, for the yearly tracker, we're at $60,000, just as we mentioned earlier. All right, now let's head over to the other side of the spreadsheet, talk about the individual trades I executed for October 30th and the 31st, and then we'll head over to Robinhood and then talk about what I plan on doing for November 3rd. All right, guys, if you can see my screen here, let's go to October 30th. So October 30th is right above where my face is at. So as you guys can see, what I was mentioning earlier was all I ran was cash secured puts. If you look at October 31st, all I ran was cash secured puts. If you look at October 29th, cash secured puts, 28th, cash secured puts, 29th, cash secured puts, October 24th, cash secured puts. So there was a lot of cash secured puts going on, and I was holding quite a bit of cash, running cash secured puts. So the amount of money I was making wasn't as much as I normally make, but I was being very patient and making sure that I don't buy shares at a premium or a high number. But the market kept pushing higher, so I kept thinking it's overpriced, and it hasn't regressed yet. However, I'm still going to maintain my patience, and I think maybe sometime this week or the next few weeks, at least in November, hedge funds are going to start that tax loss harvesting. So therefore, keep that in the back of your minds. You don't necessarily have to listen to what I'm saying. However, I think there will be part of a minor correction. So October 30th, I ran, 4 different types of options trading, but they were all cash secured puts. So I ran it against QQQ and Amazon. So for QQQ, I usually run these as dailies. I like them because I like running dailies because I'm able to adjust my strategy with the fluctuation of the market. Sometimes the market's higher, I can make more premium. Sometimes the market's lower, but I can still lock in more premium even if the market is lower. So long story short, end of the trading day, made $585. Most of the premium came from running Amazon cash secured puts. The reason why these Amazon cash secured puts were $280 and $205 at the 212 and the 210 strike price is because that was, I think, October 30th was either earnings or the day before earnings. So therefore, there was a lot of speculation that Amazon was going to have a pretty good earnings, and it did. Amazon had like a 20% cloud growth, which is massive because Amazon is already a leader in the cloud, and for it to grow 20%, that's a monumental amount. Versus if a smaller cloud provider increase their revenue 20%, it doesn't really mean much. But because Amazon is a market leader in the cloud, and like a bunch of their AI infrastructure was pretty good, and then their advertisement started also increased like 24%. Therefore, everybody was super bullish on them, and so the strike prices I chose were, and these were cash secured puts. So the likelihood of these options actually going down to 212 was very low. However, if they were to go down to 212 and 210, this would be a steal to then lock in these shares to then flip around. Now I own 200 shares to then run covered calls against. So whenever I run cash secured puts, I'm actually looking for a good strike price to buy in at, and the premium is also a bonus. However, when I do covered calls, it's a little bit of a different perspective. I like to wheel and deal those pretty quickly. So once I get some shares assigned, if they're on margin, I'm going to sell them at the money that I bought in at that strike price, and then offload them, make a ton of premium. But some shares that I am using with my own cash, I, choose a strike price $1 to $2 to $3 away, depending on what the premium is. Some people ask for deltas, and it's hard for me to give you a delta for my covered calls because usually it depends on what the market looks like. But I can tell you in dollar marks. So usually for QQQ, I'll choose something like $1 to $3 away, and then lock in their premium for covered calls. But then for cash secured puts, I might choose something $5 or $10 away and sacrifice premium for a better buying point. So then heading over to October 31st. So the first thing I did was on October 30th, I thought the market was way too high. QQQ was trading at 635. I'm like, this is way higher than it should be. So therefore, I opened a buy put, something I don't really do often. Like I mentioned when I was doing that Fisker trade, Fisher, whatever you want to call it, that finance company, is I don't run these often because you can make a ton of money, but at the same time, you can lose a ton of money. And therefore, for me to sleep peacefully at night, I don't like to do buy options at all, buy calls or buy puts, because therefore I find myself staring at the market and any little fluctuation, I'm freaking out. So for me to sleep peacefully at night, I would run 99% of my options trading, 95% of my options trading, the safe stuff, covered calls and cash secured puts. But my intuition was correct for Friday. I bought this call at $2,277, and I'm not looking for a home run when it comes to these buying options. Whenever I run buy options, I'm looking for 5 or 10%, and then I am out. I don't need to be in there. I don't need to be stressing. And it then made the move from 635 to about 631. I saw that was good enough for me, bagged $102 appreciation, and life is good, moved on. Then, as the theme from the last 2 weeks, cash secure put central. However, I did throw a new stock in the mix, a new ticker in the mix, and that's Tesla. The premiums were too good for me to pass up. So let's talk about QQQ first. So for QQQ, I ran my daily as per usual. Cash secured put premium was $37. Chose a strike price of 626. It opened at like 634, 635, closed at 629. This option expired worthless, bagged $37. Didn't need to worry about that. Wasn't a crazy high number, but I'll take $37, no assignment any day of the week. And then for Amazon, because Amazon was, very optimistic and booming from the previous day, I thought it would be a safe bet for me to run some cash secured puts. I didn't think the Amazon price would go down to 240 or would go down to 242.50 because there was a lot of optimism in the air because Amazon earnings was pretty good. It ended up closing at 247, so my intuition was correct. So I made $42 off of one of the cash secured puts and $68 off of the other. So I made $110 easy like that. Then we're talking about Tesla. So my brother is a massive Tesla bull. He's got 1,100 shares of Tesla, and all he talks about is Tesla. And then one of these days, I looked at the amount of premium that Tesla is providing for cash secured puts, and it was significant for an expiration date that was for Friday, and then selling a cash secured running a cash secured put on Tesla. I chose a 440 strike price when the market, I think, was opening at like 457 for Tesla or something around there, or 455. I can't remember exactly. I can easily go look at Robinhood, but I don't want to. So Tesla was at like that 240-ish mark. And for me, I was like, man, there's too much optimism in the market right now for Tesla to go down that much. So therefore, I ran a 440 cash secured put. So basically it means that for me to get the shares assigned, Tesla would have to go down to 440 share. And I thought that drop was too significant. However, for that amount of money that I had to use as collateral, so I needed about $44,000 for this strike price, I bagged $106. And then I chose a strike price even lower than that for the 437.50. Looked at the chart, it didn't hit that for quite some time. Therefore, bagged another $81 because Tesla closed at the 458. All of my cash secured puts expired worthless. So therefore, going into Monday, November 3rd, I have all $209,000 of my cash available to then start running some options. If there's something at discount, I'm going to run it. But from what I've already explained, I think the market is a little too high. Tax loss harvest season is too close for me to really dive in at these prices right now. So I might just be taking not necessarily bad premium, but patience premium. We'll put it that way. And then lastly, Robinhood paid me $229.94 of cash because the interest rates from the Fed is lowering. You know, this cash used to be at 4.5% interest. Now it's at 3.75. I'll still take it. $229 is $229. So end of the trading day made $665.95. So that's how I played it out. I would like to own some shares so that I can capture some appreciation, so I can capture more premium. But because of how everything's playing out, I'm just taking it nice and easy. And I'm definitely going to take that strategy into tomorrow. So let's head over to Robinhood and start talking about what I plan on doing for tomorrow. All right, guys, now that we're back at Robinhood, let's take a look at what my scenario looks like. Currently, I have about $661,000 of buying power available. I'm not going to use all of it. The most I'm going to use all of my cash to run some cash secured puts. And then I don't like using more margin than a one-for-one dollar cost to my cash. So ideally, the most I'm going to invest in is about $426,000. I'm not going to use this full $261,000. Don't want to deal with any margin calls or anything like that, especially during that time of tax loss harvesting season. So let's take a look here. Currently, $207,000 in cash, and I have about $210,000 of event contracts available. So I'm going to run my normal dailies for QQQ. I'm probably going to run 2 cash secured puts on the QQQ. But then I want to throw in another wild card in the mix. Let's take a look at some Tesla premiums. This might blow you guys away, but the premium for Tesla right now is a lot. I think they also have like their shareholders annual meeting coming up. So right now might be a volatile time to invest in Tesla, but let's just take a look at what some Tesla options would look like. So for me, because the market's kind of all over the place, ideally, I would like to run cash secured puts. I would prefer to get something at a better buying point than a worser buying point. So right now, Tesla is trading at $457.64 a share. So for me to run a cash secured put on Tesla, I would need about $46,000 of collateral. So what does that mean is you need to either have that in cash or margin so that you can run this option, because the way it works is if this gets assigned, like the share price goes down to the strike price, you are going to get assigned those 100 shares of Tesla, but you're going to make an upfront premium. So right now, if I decided to do a at the money cash secured put on Tesla with $46,000 investment, I would make $1,400. So with my current account at $200,000, I could probably run 4 cash secured puts on Tesla. 4 times 1,400 is a lot of money. It's $5,600 of premium. That is wild. I can make $5,600 of premium, and then all I have to do, because Tesla, they don't run dailies, they're only week-long calls, is I would just wait till Friday to see if it got assigned or not. So that might be a method, but ideally, I definitely would run 1 cash secured put, maybe 2 cash secured puts on Tesla. So 457 is a little bit high. Let's just look at the chart for a minute. Look at the chart. So right now it's at that 4. Let's look at the last year. So where Tesla is at right now, it's at a almost a 52-week high. And if you know anything about Tesla, every time it hits a 52-week high, there's going to be some sort of pullback. Like even here, it had hit 459.46, and there was massive pullback to 429. So therefore, this is a very volatile stock. But with it being that volatile, you are going to make a decent amount of premium based off of it. So now the question goes, it's coming up to another high. Is it going to regress anytime soon? So for me, I think I'd probably choose a cash secured put strike price of 440. Let's see what that might look like. So to run a cash secured put in Robinhood, sell put, and see what 440 would look like. So if I chose a strike price at 440, I would make $735 of premium. That is a pretty good amount of money for the investment of about $44,000 of collateral that I would need to run this. I run that twice, $1,400, and I still have it'd only be about $88,000. I still have about $120,000 left where I can run cash secured puts on the QQQ. Ideally, tomorrow I might run a couple of cash secured puts on Tesla, and let's take a look at what QQQ might look like. So QQQ is currently trading at that, 631. Let's take a look at the last week, kind of bouncing around. It's these, 638 high, 635 high, and then it regresses, hits that high and regressed. So it happened twice already. And you can almost see that the week over week, it's kind of trending downwards. So ideally, when I choose a strike price for QQQ, I have to be ready that this might get assigned because of the market regressing tax loss harvest season. So let's take a look at what some of these options will look like. Let's hit set, sell, put, because running cash secured puts and expiring 0 day. I usually like to run my QQQ daily, 630.92. So that's where we're at. I will say some of this premium is a little bit higher right now than it is going to be in the market. So it's probably going to be about 25% less just from what I've observed, sometimes even 50% less. So let's see. For cash secured puts, what I've noticed, at least for me personally, is I like choosing a 0.2 to 0.3 delta. So if anyone that doesn't know what that means, that's the likelihood that this option is going to execute. So there's either a 20 or a 30% chance. So right now, based off of these premium, I would be fine making about $100 of premium. So then let's take a look at what that delta might look like. That delta is a 0.24, and that would be exactly where I want to be. It's right in the middle of 0.2 to 0.3, $106. Run 2 of these. So then for Monday, I'd make about $212 of premium based off of my QQQ, and then throw in maybe 1 or 2 Tesla cash secured puts. That might be $1,400. So in one day, I can make $1,600. I would lock that in. And then for the remainder of the week, I can just keep running cash secured puts on QQQ. So ideally, let's see. I might do that. Yeah, I might do that. that pretty much wraps up the video, guys. Hopefully this was helpful. Yep. Trying to get more I'm trying to get back into the swing of making videos on a daily basis. It's just kind of a stretch right now with where my life is at with work and whatnot. But that wraps up the video. Hopefully, you guys learned something new. Hopefully, you have a different perspective on what the market looks like. Hopefully, you're not too aggressive, because I definitely think it's that tax harvest season. So don't overpay for shares right now. Wait until maybe December before you really start going heavy into the covered calls and the wheel strategy. But yeah, guys, that's the video. Hope you're doing well. Let's stay locked in. Let's stay disciplined. Let's stay harvesting. I will see you in the next one.